Unemployment falling like a stone, Eurozone recovery underway. Is there nothing holding back the UK economy? Neil MacKinnon joins me down the line in a bid to decipher today's unemployment figures and the closely watched BOE inflation report. Neil, prudent and cautious is how the BOE intend in reacting in regards to the amount of slack in the UK economy. Taking into consideration both the ILO release and Carney's statement, what caught your attention and indeed the likely attention of investors?
Well, I think that the main focus for investors is the timing of the first hike in UK interest rates. And the fact of the matter is that ever since Mark Carney became Bank of England governor last July, he's beaten a consistent retreat from previous positions on policies. I think there's a real danger that the Bank of England continues to be behind the curve, that it continues to react to events, that it's forced to change its position because of a much better economic situation, much better labour market situation. And I think the notion that somehow interest rates can be delayed into next year is actually a very dangerous one, because what might happen is that then, in the event of compelling evidence that interest rates should go up, the Bank of England might actually have to make much larger and maybe more frequent increases in interest rates in order to match what's going on in the economy.
Average earnings were a bit of a moot point. Wage growth outstripped inflation for the first time since 2010. The growth was slower than some economists expected, but could this temper the BOE to an extent?
Well, I think that the Bank of England is certainly looking for ways to defer an interest rate increase. So there's been a big debate about the amount of slack in the economy. That's a difficult one for economists, because measuring slack is fraught with all kinds of statistical difficulties. And it also assumes that there's not been any permanent reduction in slack because of the previous recession and the effects of the financial crisis. It may well be there's actually not that much slack in the economy. What that would suggest is that sooner rather than later we might start to see a pickup in inflation pressures. And although average earnings growth remained unchanged on the headline number, certainly some of the pay settlements data is now showing some pickup in pay settlements, and there are a number of industries that are actually reporting a shortage of skilled labour. So, I think that there is a real risk that we might actually start to see a pickup in inflation pressures at some stage, and that will force the hand of the Bank of England. Okay,
so Neil, how early before we start to have members voting for a hike? If you were on the MPC, when would you want a rise and by how much?
Well, if I was on the MPC, I'd be arguing for a 25 basis point hike right now. And after the summer, I'd be looking for a further quarter point increase, and then assess how the economy could absorb that. And at the end of the day, I think that the economy should be able to absorb such interest rate increases. I think if it can't, there's something that is badly wrong with the economy. And I think, for me, the real risk, especially for future financial stability, is that the Bank of England and the Federal Reserve are in danger of creating an addiction to debt. And I think that zero interest rate policies can actually create excessive risk-taking. It can intensify financial imbalances and sets in train the next financial bubble, which in the UK you could argue is already happening in certain parts of the housing market.
And if we talk about the strength of the pound, it has been making some significant moves already, which in turn bears down on inflation. Carney stated export strength faces a 10% appreciation on the sterling. What does it ultimately mean for the BOE, and what is your outlook for the pound?
Well, the pound has been going up because the UK economy is in better shape than many of its competitors, faster growth. Housing market is also a driver of the pound, and mortgage approvals have been going up. So it's been no surprise to see the pound go up. But I think we should keep things in perspective. We've had in the aftermath of the financial crisis quite a sharp depreciation in the overall level of the pound, 25% drop. And all we're seeing is just a very partial recovery from those sorts of lows that we saw back in 2009. So, I think the Bank of England should just be a little bit careful in putting too much credence on the exchange rate and trying to say that the very partial recovery from a very low base is a reason not to tighten policy. I think is very misguided.
Neil, thank you so much for your time and insights today. Lovely to speak with you. Well, viewers, that's all from me for the moment. Natalie MacDonald brings another exclusive interview today looking at the Swiss ZEW report, so make sure you click back for that. But for me and for now, it's goodbye.